Hello students. Well, in this video we're going to look at just one really specific example that can sometimes be difficult for students. And this is one of those areas where real life is different from life in the classroom. You know, sometimes real life is way harder, such as impairment calculations, when you really have to figure it out instead of just being handed a number. This is the opposite. In real life, you know what you sold equipment for, and if you bought some, you absolutely know how much you paid for it. But in the classroom, the teacher might think, wow, does this student really understand this? I think I'll just not tell them how much I paid for that equipment, and it's your job to figure it out. So let's look at how you do that. And this is the purchase and sale of equipment. So we don't care if this is the direct or indirect method because this is an investing activity. It's the same under both methods. So from our balance sheet, here's year one equipment, and we went up quite a bit in year two to $500,000. And our accumulated depreciation went from $150 to $160. Now from the income statement, last year's depreciation expense, year one, 65, and this year it's 90. And you might be thinking, whoa, what happened? I had 150,000 accumulated depreciation, my yearly expense was 90, and I've only got 10,000 more. So a couple of things happened. We sold equipment, but did we also buy equipment? Well, first let's look at our sale. We sold equipment. It had a historical cost of 100,000, an accumulated depreciation of 80, and we received $18,000. So let's just quickly do this. Here's the 100 historical cost. Here's the 80 accumulated depreciation. We see that our book value is 20, and our sale price was 18. So 20 less 18 is 2. Now this is in thousands, I guess. So we had a $2,000 loss on this sale. So before we even get into the technical aspect of figuring out investments, let's just remember that if we're doing our cash flow statement using the direct method, this is not in operating activities because the sale of equipment is not an operating activity. So it's an investing activity. So under the direct method, you don't care about this. However, if we were using the indirect method, there would be a line on your income statement, and the line would say loss on sale of equipment. And then it would say 2,000, right? Well, anyway, that didn't look good, but it would say 2,000, right? So what we have here is a line on your income statement that says I lost $2,000. That causes your net income to be $2,000 lower, but you didn't pay anyone that money, did you? You don't say, oh, look, I lost 2,000. Here's 2,000. No, instead, you received 18. So the first thing we have to do, if you have a loss on sale of anything, and you're using the indirect method, is we have to add that money back because it is a non-cash item that caused our net income to be lower. So just again, if you're using the direct method, you can ignore it because we start from nothing. But if we start from net income with the indirect method, that loss made your net income smaller, and that is not a cash outflow, so you have to add back the 2,000. So that's just a little aside. Let's now look at this from the point of view of investing activities. And here's how we do this. We say, first, what would our end of year one or beginning of year two have been with this sale? Notice we had at the end of year one 400,000, but during the year we sold equipment with a historical cost of 100. So if I had done nothing else throughout the year, we would have $300,000 in equipment, wouldn't we? And let's look at accumulated depreciation, because from your basic accounting, you know that when you sell equipment, you have to close the accumulated depreciation for that account. So we started with 150, but we would have removed accumulated depreciation of 80. So these here are the balances that we would have at the end of year 2 if we had not purchased equipment. So the answer to this question, did you purchase equipment, is yes. You did purchase equipment because you have way more than $300,000 in equipment and you have more than $160,000 in accumulated depreciation. So how much did we buy? Well, here is an easy way to figure this out. Here's our balance from year 2. And here's what it would have been if we had not purchased equipment. So we purchased $200,000 worth of equipment. Now, similarly, this 160 is the balance of accumulated depreciation that we did have. If we had not purchased equipment and depreciated it, then we would have had 70, right? This 70 here, which is after closing out the equipment accumulated depreciation. So that's $90,000 extra. And that $90,000 corresponds to our depreciation expense for the year. So we could do two things from this. One, we could actually calculate depreciation expense for the year. If you were not given this number, we just calculated that number. The second thing is we figured out that we purchased equipment for $200,000. So if we're doing our investing activities on our statement, call it investing, we're going to have one line that says purchased equipment, and it's going to be $200,000. And then we're going to have another line that says sold equipment, and that's going to be $18,000, which is the money we received. Okay, and if we did nothing else, then what we would have at the end we would call that cash used by investing activities, and we would simply add these together, and we would get $182,000 cash outflow, and that's why we say cash used by investing activities. Now, you might say, hey, can I net these out? Well, short answer, no, you cannot net them out. You can't just write, net purchase of equipment, or you can't write increase in equipment 182. You can't do that because we're trying to show investors and people interested in our statements where we spent money and where we receive money. So to net it would be to give them less information. Okay, so that's just one small item that tends to give people trouble from the cash flow statement. In our final video on cash flow coming up, we're going to look at this kind of a longer example with a lot of things in it, and that's going to be a full example of both the direct and indirect method.